What do you do when disaster strikes the financial markets? Today we're diving deep into how traders recalibrate their beliefs when chaos hits, and why panic sellers risk falling for irrational traps. Case in point, recent fallout from the Iran conflict. Picture this. A massive sell-off is underway because news of the Iran conflict has investors spooked. People look at plunging portfolio values and start dumping stocks left and right. But here's a sneaky truth. Not every decision during market turmoil is rational. Let's talk about belief updates. Trader psychology research reveals that in times of market stress, people recalibrate their expectations fast. But here's the catch. This recalibration is often driven by emotions rather than data. Think about it. In the heat of the moment, your brain is screaming, "Sell! Preserve what you can!" But is that really the best move for your portfolio? Probably not. Here's why. Economic shocks, while real, are rarely as bad as people fear in the moment. When the news breaks, the markets move quickly. But if you look past the hysteria, you'll see that much of the sell-off is based on emotional fear, not rational analysis. And those who can separate the signal from the noise, they're the ones who make a killing. Now, let's illustrate belief adjustment with an example. Remember how oil spiked immediately when the Iran conflict broke out? Traders who panicked might have bought into the surge, predicting never-ending price hikes. But within a matter of days, what happened? The correction. Because markets naturally rebalance as new information comes to light. This is the lesson. When portfolio values drop, stop and ask yourself, why? Am I reacting because of real data, or am I swept up in the herd mentality? Belief adjustments made in fear often lead to regret. But here's the good news. You can train yourself to handle these moments better. Start by reviewing historical events. Whether it's the Lehman Brothers collapse or geopolitical shocks, you'll notice nearly every market disaster was followed by recovery. This knowledge alone can help you stop panic in its tracks. Second, create a trading plan beforehand. When you've already outlined your risk tolerances and goals, you won't feel paralyzed or overly impulsive during volatile events. Finally, remember that market chaos creates opportunity for the disciplined. If others are panicking, the door is open for you to find undervalued gems, just like the pros do. So the next time disaster strikes and the markets spiral, don't just act. Ask, what's driving this reaction, and what would a rational trader truly do? If you're ready to overcome panic with strategy, follow now and take your trading skills up a notch. Join the crowd, a free weekly newsletter to help you trade with the professionals.